38%.
That is painful to hear out loud.
I mean, it's a failing grade in any school I went to. But according to this stack of research we're wading through today, that's the legacy banking efficiency score.
That's where the whole global financial system sits.
38%.
And just to be clear for everyone listening, that isn't some random number they threw out to scare people. It actually measures the friction.
The real cost.
The cost, the time, the failure rates, all of it.
Right. And when you pair that F grade with the other stats in these documents, like 1.7 billion people are still completely unbanked.
Still, it's staggering.
Or that $48 billion just vanishes every year, just in remittance fees. Right. You start to get the picture.
The picture being that the system isn't just, a little slow. It's fundamentally broken for the world we live in now.
It feels like we're trying to run this AI-driven, borderless economy on dial-up internet.
That's actually a really good analogy. The whole argument in the source material is that our financial rails were designed for a physical world, for cash.
For a cash-based world, exactly. They were not built for a reality where value needs to move as fast as information does.
Which brings us to the subject of today's deep dive. We're looking at a company called iPhenoid.
Right.
And I have to warn you, the language in these pitch decks, it's ambitious. They don't call themselves a bank or even a super app.
No, they use a phrase that honestly stopped me in my tracks. They call it a new financial species.
A species. It's such a bold claim.
Yeah.
So we've got these cinematic pitch scripts, some really heavy-duty risk mitigation papers, investor overviews.
A real mix.
And our mission today is to figure out if this is an actual revolution or if it's just really, really good marketing copy.
Well, if you strip away all the gloss, what iPhenoid is proposing is basically an AI-first financial operating system.
Okay.
And it really boils down to combining two huge concepts. First, what they call intelligent financial agents or digital twins.
Got it.
And second, a fiat-backed digital settlement network. So we're shifting from artificial intelligence to what they're calling autonomous intelligence.
Yeah.
And we're going to have to talk about this word later. From digital to phygital.
Oh, yes. We are definitely unpacking phygital.
Okay.
But at the highest level, the thesis is simple. Money moves too slow, it costs too much, and the interface we use to manage it is, well, it's dumb.
Dumb is a harsh word, but when I look at my banking app,
Yeah,
it's basically a digital ledger. It doesn't help me. It just lists what I've already spent.
exactly. So let's start with their solution to that dumb interface. The digital twin, the agent.
The pitch script makes a huge deal out of this. It says this isn't a chat bot. It's not one of those, press one for your balance things.
Far from it. The documents describe this as a financial specialist that's paired with every single user.
Every user.
Doesn't matter if you're a migrant worker sending money home or a business owner in Germany. You get an AI agent.
It highlights the capabilities. It speaks over 50 languages.
Which is just massive for global inclusion, right? If you don't speak English or the local banking language, you are usually shut out of anything sophisticated.
That barrier just disappears.
It's gone.
But it goes beyond just translation. The notes say this agent can join global meetings and negotiate. Now, that's the part I'm stuck on. Is my AI agent actually sitting on a Zoom call for me?
In a way, yeah. I mean, think about the cognitive load of running a small business across borders. You have to handle invoices, currency conversions, compliance.
The negotiation of terms.
All of it. iPhenoid is saying, let the agent handle that. It can analyze risk in real time. It can execute the work.
So it's not just telling me, hey, you spent too much on coffee. It could be negotiating a trade deal for a textile maker in Turkey.
Who doesn't speak German, with a buyer in Berlin. Precisely.
Right.
It bridges that gap. But, and I know where your mind is going, this is where we have to be extremely critical.
Oh, yeah.
Because when most people hear autonomous AI moving my money, they don't think convenience. They think danger.
I think Terminator, but for my bank account, I'm just picturing my agent deciding to YOLO my life savings into some meme stock because it hallucinated a trend.
It's a valid fear. And their risks and mitigations document is surprisingly self-aware about this. They are very explicit. These are not uncontrolled autonomous systems.
So how do they control it? Because AI hallucination is a very real thing.
They use a concept they call policy-bound execution.
Okay, break that down for me. That sounds like lawyer speak.
It basically just means the agents are assistive, not independent. They operate inside a sandbox that you build. You set the constraints.
But I tell it what it can and can't do.
Exactly. You might say, you can negotiate invoices up to $5,000, or you can never transfer funds to this region without my biometric approval.
It's like a very, very smart dog on a leash. It can run, it can fetch, but it can't decide to just move the family to another state on its own.
That's a great analogy. It can't self-modify its own policies. It has no independent intent. It only executes inside the boundaries you set.
Okay, that makes me feel a bit better. But why go to all this trouble? Why not just build a better app? Why do we need an agent?
And this is the strategic genius of it, or at least the strategic attempt. It's what the investor overview calls the relationship depth moat.
A moat, a defense against competitors.
Right. Think about it. If you switch bank accounts today, it's annoying, but you do it. You move the money. But if your iPhonoid agent has spent 3 years learning your business, your risk tolerance, your suppliers,
then leaving means I lose my financial brain.
you lose the tuning. It's so personalized that going back to a generic banking app would feel like going back to the Stone Age. That's how they create stickiness through utility.
It's clever. It's the Netflix algorithm approach to finance. You stay because it just knows you.
But an agent, no matter how smart, is useless if it can't actually move the money. And that brings us to the plumbing, the infrastructure.
The iPhonoid coin.
Yes.
I have to stop you there because the moment I saw the word coin, my crypto scam radar started pinging like crazy. Is this just another crypto project?
A very, very fair question. But looking at the technical specs, the short answer is no, at least not in the speculative way we think of crypto.
So there's no to the moon happening here. No Lambos.
No Lambos. The documents are extremely explicit about this. It is a digital settlement asset, and it is fully fiat-backed.
Okay, explain fiat-backed for anyone listening who might not be deep in the fintech jargon.
It just means for every single iPhonoid coin that exists, there is a real US dollar or a euro or a pound sitting in a segregated bank account. A coin is only minted when real money enters the system.
And if you want your money back?
The coin is burned, and you get your cash back, 1-to-1, redeemable at par.
Okay, so it's basically just a digital voucher for $1. But if it's just representing $1, why bother? Why not just use the dollar?
Because of the rails. This is the whole plumbing issue we started with. If you try to move $1 from a bank in New York to, say, a rural bank in India, what happens?
It goes through SWIFT. It bounces through a bunch of correspondent banks. Everyone takes a cut.
And it takes 3 to 5 days. That's the legacy friction. But if you turn that dollar into a digital coin inside the iPhonoid network, you unlock what they call the agent-to-agent economy.
Right. This was that visual in the pitch deck. You have Agent A, the buyer, and Agent B, the seller, and they're just swapping coins.
Directly. They call it a distributed coordination layer because the value is now a token on their own internal ledger. Agent A can send $1 million to Agent B across any border instantly.
Define instantly.
The documents claim under 2 seconds.
Under 2 seconds, compared to 3 days.
And for a fraction of the cost, because you're not paying all those banks in the middle, you're just bypassing the old rails entirely.
So if I understand their critical mass concept,
Yeah.
the goal is to get as many people as possible inside this walled garden.
Correct. In the beginning, you might just use it to move money in and out. But as adoption grows, the goal is for most transactions to just be agents swapping these internal coins.
And the old banks just become the on-ramps and off-ramps.
Exactly. They just become utilities. You use the bank to get your salary into iPhonoid and maybe to get cashed out. But the real economy, the buying, selling, trading, that all happens on the iPhonoid highway.
That is a direct threat to the banking status quo if I've ever heard one. But to build that highway, you need users. You need cars.
And they can't just be tech bros in Silicon Valley.
Right. And this is where their strategy gets interesting, and where we have to finally talk about that word. Phygital.
Phygital.
It's a terrible word, isn't it? Physical plus digital.
It sounds like a marketing buzzword from, 2015.
Yeah.
But they treat it like a core philosophy. What does it actually mean for their rollout?
It means they get that you can't just launch an app and tweet about it to reach the unbanked.
Yeah.
You have to combine these physical world economic anchors with the digital agent stuff. Economic anchors. What does that look like in practice?
Well, they're targeting the underserved, migrants, global freelancers, but specifically SME, small to medium enterprises. And the strategy isn't, let's sign up everyone, it's let's target closed-loop communities.
Give me a concrete example. What's a closed-loop community?
The docs mention trade clusters. So let's go back to that textile manufacturer in Turkey and their network of clothing stores in Germany. That's a corridor.
Right. Goods go one way, money goes the other.
And right now, that corridor is clogged with fees and delays. So iPhenoid goes to that whole cluster and says, hey, if the manufacturer A&D all the stores get on our platform, your payments are instant and practically free.
I see. You don't sign up random people. You sign up the entire supply chain.
You build density in specific corridors. Once you have the supplier, the buyer, and the logistics company all using the same protocol, the network effect kicks in hard.
And that explains the revenue model, doesn't it?
Yeah.
Because I was looking at their financials, and they aren't charging big fees.
No, not at all. Traditional banks make money on interest spreads, holding your money, or a bunch of hidden fees. iPhenoid's model is all about volume. Low, simple, volume-based transaction fees.
They want to be the Visa network, not the bank vault.
Exactly. Plus, they'll monetize some premium agent capabilities and B2B stuff. But fundamentally, it's a volume play. And the projections are aggressive.
I saw that. Total addressable market going from 300 million to 378 million. And a goal of 4.7 million users by year 4.
Which, for a financial infrastructure play, is huge. It's much harder to get 4 million people to trust you with their money than to get them to download a game.
Trust, that is the key word, isn't it? And that leads us to the biggest hurdle in this whole thing, the government.
The regulators.
I'm a regulator in the EU or the US, and I see autonomous AI agents moving money across borders instantly. I am not applauding. I am reaching for my big red pen and a cease and desist order.
Oh, absolutely. The regulatory friction is probably a bigger challenge than the technical friction. And the key risks document shows iPhenoid knows this.
So what's the plan? How do they avoid getting shut down before they even launch?
They're using a modular architecture. So instead of building one giant monolithic thing, they separate the tech into 3 distinct layers.
Yep. Okay, walk me through the layers.
Layer 1 is coin issuance and custody. That's the boring, highly regulated banking part. Layer 2 is the agent intelligence, the AI brain. And layer 3 is governance and compliance.
And why separate them?
It allows for what they call progressive onboarding. So let's say the U.S. is fine with the agent intelligence part, but they're still really nervous about new digital coins.
Which pretty much the climate right now.
Exactly. So iPhenoid could launch the agent layer in the U.S. plugged into a traditional bank while they wait for the coin license. Or if the U.K. has different rules than the EU, they just swap out the governance module for that region.
So it's like Lego blocks. If one region blocks one specific piece, you just swap out that piece. You don't have to scrap the whole car.
Exactly right. It makes the whole system more resilient. They're targeting EMI-friendly places, first U.S., EU, U.K., to build that base.
Smart. Now, let's talk about the other side of risk. The bad guys, hackers, fraudsters.
The security question.
We talked about the AI not going rogue on its own. But what if someone hacks me? If everything is instant, under 2 seconds, can't my money be stolen in under 2 seconds?
That's the classic fear with real-time payments, right? Once it's gone, it's gone. But iPhenoid actually flips the script here. They argue the agent itself is a superior defensive layer.
How so?
They call it active defense. Think back to that relationship depth we talked about. The agent knows your patterns. It knows you pay suppliers on Fridays. It knows you never send money to accounts in, I don't know, North Korea.
So it has a baseline of what's normal for me.
Precisely. So if you suddenly try to drain your account at 3 a.m. to a suspicious wallet, the agent doesn't just process it. It introduces what they call deliberate friction.
I love that phrase, deliberate friction. Usually the tech companies just brag about being frictionless.
But in security, friction is your best friend. The agent might say, I need biometric verification for this, or I'm delaying this transaction for 12 hours.
What if it detects signs of coercion, like a kidnapping scenario or something?
Or even just a scammer on the phone bullying an elderly person. If the contextual clues don't match up, the agent goes into a zero trust mode. It literally protects the user from themselves.
That's actually really reassuring. It's like having a bodyguard who steps in and says, "Are you sure you want to do that?"
Oh, and they mention one more safety feature, liquidity awareness.
This one's for people who are bad at math, like me.
It's for everyone. Since the agent has a full view of your cash flow, it can prevent you from overextending yourself. It won't let you send a big payment if it knows you have payroll hitting tomorrow that would make you overdraft.
So it won't let me bounce a coin.
In theory, yes. It prevents the accident before it can happen.
We've covered a lot. The agent, the coin, the digital strategy. still hate that word, and the safety stuff, it feels like this is trying so hard to be something other than just another neobank.
And that leads us right back to the investment thesis in the documents. They flat out say this is an infrastructure play. It's a financial operating system.
And they make this really sharp comparison. They say traditional banks have the license, but not the tech. Crypto has the tech, but lacks the regulation and the trust.
And iPhonoid is trying to wedge itself right in that gap. They want the speed of crypto with the safety and regulatory backing of a bank, a regulated fiat-backed settlement network.
It's a bold pitch. You're moving the whole concept from just banking to intelligent execution.
It completely shifts the value proposition. You stop paying for the privilege of storing money and you start paying for the intelligence of moving it.
So what does this all mean for us? The sources describe this future where trust isn't granted by institutions, but created through intelligence. That's a heavy concept to land on.
It really is. It suggests our trust won't come from the marble pillars of a bank branch or a logo on a credit card. It'll come from the code, from the consistency of the agent working for you.
And that leads me to my final thought for everyone listening. If iPhonoid, or something like it, actually works, if we move to an economy where AI agents are negotiating, trading, and settling payments directly with other agents in seconds, what happens to the whole concept of a bank?
That's the billion-dollar question, isn't it?
Do they just become invisible utilities? Plumbing that we never actually look at. I mean, when was the last time you thought about the water pipes in your house?
Only when they burst.
Exactly. Are banks about to become the pipes? And if they do, the main interface for our entire financial life becomes the agent. The bank branch is just a server farm somewhere.
Something to chew on next time you're standing in line to talk to a teller.
Or arguing with a chatbot that doesn't understand what refund means. That's all for this deep dive into iPhonoid. Thanks for listening.
Thank you.